Welcome to Master the Tax Game with Chris Marble from CMM Financial. Tax season is underway, and in this episode, we'll begin to explore tax-saving strategies to help you move forward towards total tax elimination.
Welcome to Mastering the Tax Game. I'm Scott Mitchell, and this is Chris Marble, CPA. People are going to be inundated starting Tuesday with the media covering politicians who are going to make pronouncements about the tax code, and politicians who may or may not have made their tax returns available. One candidate, Mayor Pete, says, I'm the one with the least amount of net worth, and there's discussions about how bad people are if they have net worth. Some of this is out of control. Help us understand. Take us through, as we're going through tax season, snippets that we are going to hear that we need to take out of our mind and dismiss because it's just factually incorrect, and it gets huge coverage.
Okay. The easiest one that you hear from the politicians that you can pretty much dismiss no matter what is anytime they come out, like again I say, and I just kind of like to disclaimer it that it doesn't matter to me which party's represented. I hear it all the time that we're going to work in the favor of middle-class Americans, husbands and wives that are both W-2 employees, which is, the vast majority of the people in this country. That is never the case. This is kind of a very simplistic viewpoint, but here's what I've seen over the years of doing people's taxes. The rich don't pay taxes because they figure out a way how not to. No, they figure out the system and they figure out a way how not to. Your lower income people, they don't pay taxes. As a matter of fact, they get earned income credit. They get free money from the government when they file their tax return. It is everybody else that pays the lion's share of the taxes, which are your husband and wives, your both W-2 employees, middle-class Americans with the 2.5 kids and the white picket fence. They're the ones that are paying the taxes. What is a very interesting viewpoint we're talking about today with somewhat of total tax elimination is there's actually people that make considerably higher than that $40,000 range that if they're self-employed and, for example, if they were to have a whole bunch of rental properties that they're depreciating those rental properties and they're showing losses on them and they're having passive losses, then all of that will bring them into an earned income credit where they can actually get earned income credit on their tax return even though they're not considered technically lower income.
Why don't we hear of things like that?
Because it's just not something that what you hear is, this is what you hear from the general public. You hear, I make too much money to get this deduction. I make too much money to get credit for my student loan interest. I make too much money to get my child tax credit.
Why don't we hear much about that?
We don't hear that because there's a misnomer out there that most people say, I make too much money to get this type of tax deduction. People understand in general that there's phase-out rules on different deductions and different credits. You got a phase-out rule. If you make so much money, you don't get to claim your student loan interest. If you make so much money, you don't get a child tax credit for your kids. If you make too much money, you don't get to claim your child's college tuition as a credit on your tax return. But all of that is not factored into what your gross income is. It's factored into what is it that you show after your self-employed deductions. If there, again, like I said, if you can embrace the idea of entrepreneurship, then and if you think about it, it makes a lot of sense because a lot of the tax law changes in 2018, once I went through a whole tax season and saw who benefited the most from the tax law changes, small business owners, the people that are just strictly working for corporate America, husband and wives, they were getting raked over the coals with taxes. But it makes sense because of who we have in office, a business owner. So all the tax law changes that got passed, a lot of them, they actually benefit small business owners. And they're actually stimulating the economy because now these small business owners, I always hear all the time, so many times people say it's not fair because these small business owners, make more than I do, but they're paying less in taxes. But those people are the people that are employing other people. So it's stimulating the economy because the more they can save in taxes, they can hire another employee. They can hire another 2 or 3 employees.
So Monday, the governor of Oklahoma makes his State of the State. The President of the United States does his State of the Union next week. All of these legislative bodies are convening. Meanwhile, people are in the midst of tax season. What's your advice? First off, on listening to what's going to be said, and number 2, you've told me some things that could unlock entrepreneurship, could unlock some creative impulses for people to go do the side hustle. What's the headline over what's happening right now? Tax season, political season. Give me a headline.
I would say the same thing that you hear some of the politicians even saying and have been saying for years. Be cautious what you internalize, what you're hearing. There's a lot of, I guess the hot word is there's a lot of fake news. There's a lot of things out there. There's where I was saying be cautious about when they say we're going to fight for the everyman, we're going to fight for the every woman, we're going to fight for the middle class people. You should elect us. Just be cautious when you listen to that. And so many times, they all have their agenda. They all have their points that are supposed to differentiate themselves from the other candidates. And so many times, all we hear is their questions that are being asked, and we don't actually study them, and we don't actually study. There's a lot of information if you were to dig into it, but each of the candidates, and okay, if you are going to help the everyman, you are going to help the everywoman, let me see point A, point B, point C. Let me see what that looks like, not just you standing up there telling me that's what you're going to do. Right now, you need to be looking at all of your information. You need to be thinking about, what do I spend my money on? And that's probably the easiest starting point for every taxpayer is to sit there. A lot of times they say that our heart is where our pocketbook is or something like that. So to really assess where do you spend your money on, one of the biggest things that I see come across my office is we fish for deductions for our clients. So the clients provide us with what they think is everything they need to complete their tax return. And truthfully, 9 times out of 10, it's incomplete. And a lot of other places would just do data entry on them, which essentially they could go on TurboTax or H&R Block online and do that themselves for a fraction of the cost, basically. But if you're with a professional and you're seeking professional advice and you're paying for professional advice, you should be getting professional advice. And so what we do is we go on the back end and we say, okay, this is what you gave us. You seem to be a philanthropist. You seem to be giving money. You gave us a giving statement from a nonprofit. Is this the only nonprofit that you gave to? And what we'll hear, oh no, you know what? I supported a nonprofit radio station. I gave them $20 a month. So there's another $240 of the year. So what a taxpayer can do to be proactive on the front end to get ready for their taxes, because like you said, tax season started on Monday, so we're still very early on in the game of that, and that'll go till April 15th and file extensions, and it'll go even into the fall for a lot of people. But to be proactive is to start looking through their bank statements and credit card statements and see where they spent their money on, and start to budget that or compartmentalize that into categories, and then be able to see, because what we tell our clients is it's better to give us too much information and we'll sift through it and we'll say that's not a deduction, this is a deduction, than to give us something that's very incomplete and very minimal, and then they're not getting all the incentives that they can on their tax return.
Could we talk about 2021 for just a moment?
Sure.
We're just into February now. What did I do wrong in 2019 that I should have been doing that would help me out getting ready for my taxes in 2020? What should I do now that a year from now when we're sitting here, you said, you did that right, Mitchell?
Right. So it's similar to what we just were talking just about, but what I see so many times is when somebody does have either their own business, or they have, if their primary business is with corporate America and they have a side hustle that they're trying to turn into a business. So many times they'll be starting a business and all they have is a personal bank account and a personal credit card account. And they're running business expenses through it. They're running personal expenses through it. And there's a phrase for that called commingling funds. And that's
a no-no?
That's a quick way to get in trouble.
Okay.
To do that. So I'll give you a really classic example. So business meals are a tax deduction. So if Scott Mitchell went to Outback and spent $50 on a steak, had a nice steak dinner, but was conducting a business meeting, and all he had was a personal credit card, and he claimed that on his taxes as a business meal, 2 years from now, when the IRS finally gets around to auditing that tax return, they're going to say, well, that was paid for with a personal credit card. That should have been probably a personal meal. And they'll probably disallow the deduction. Now, if that same $50...
Even if it was legitimately a business lunch.
Right. And see, what they're counting on, and this is what I've heard happen with taxpayers, the taxpayer will say, they're asking me about my business meals from 2 years ago. Chris, I've slept since then. I don't know what I was doing at Outback that night. I don't know who I was with that night. That was 700 days ago. So they're counting on that you don't have the recollection of that, and they're going to disallow that on your tax return. Now, the burden of proof shifts from you to the IRS if you're actually using a business card to pay for that same $50 meal. Now, all of a sudden, they have to prove that that was not a business meeting that you were having. So what you should do for 2020 to get ready for 2021, and what anybody should do, is just to make sure that you're paying for business stuff out of the business account, you're paying for personal stuff out of the personal account, you're not commingling funds. Another thing that happens with that I know we're talking about taxes today, but from a liability standpoint. So technically, if you have a business structure and your personal assets are protected if you're ever sued on the business, if the person that's suing you, and their attorney will try and do this, if the person that's suing you is trying to show that there's a muddying of the waters between your personal and business stuff, then they can attempt to try and go after your personal assets too, because you're paying for business stuff out of the personal account, personal stuff out of the business account. If you have that clear separation, then you're protected from a liability standpoint as well.
Go to their website, facebook.com/cmm.financial.services.